Rahul sir, respected Regional Council member, coordinator, CA Hardik Vyas, and my fellow members. I am very much delighted to be here to address all distinguished audience on a very exciting and new topic, exploring derivatives for consistent income. Before I begin my session, as mentioned by Rahul sir, very rightly, this is a very risky segment. If one doesn't care much on learning and directly jump to the market, ultimately and unfortunately, data says they are blowing up their own capital. So before starting my session, just a small disclaimer from my end. I am not a SEBI registered research analyst or investment advisor. This session is purely for the educational purpose. Neither me nor WRC will be responsible for any financial losses or damages. Please consult your financial advisor before investing and trading. Apart from this, SEBI has come out very recently, and this is again a risk disclosure. This is a very risky thing. One need to properly get educated and then jump into the derivative segment. So these are the disclaimer, friends, and just I'm going to start my session. I think my screen has been set and visible to all. This is the third slide, right?
No. I think Hardik Bhai, still I think the screen is. Mishra ji, can you check please?
सर एक बार वापस शेयर करेंगे.
Hardik, can you change the slide if you just see? Yeah.
I just shared.
Now, yeah. Now it is visible. Yeah.
Okay. So these are the standard disclaimer again. I'm running through the display. I hope this is now visible.
Yes, sir.
Yes, it is visible. Go ahead.
Thank you. So, friends, here we are for the very much interested topic, option trading. How can we generate consistent income from options? First of all, let me clarify that future and option collectively says F&O segment is considered very much risky in its own nature because of certain things. Options are having a different kind of flavor than futures. So we are now only focusing on the options trading. Before coming to option trading, friends, my main focus of today's session will be on first two words rather than last two words. It is consistent income. How we can generate consistently returns from the options trading. So our main focus will be on consistency. Friends, these are the basics of options. All the participants are expected to having this much of basic knowledge while attending this kind of session on derivatives. Considering this, I am just covering very brief about call and put, that is called options. Call, which is defined as CE, which is having an option to buy assets and at an agreed price on or before a particular date, which is very simple and very well known to all of us. Same way, put, which is displayed by PE, option to sell an asset. Same way, get an agreed price on or before a particular date. So here it is abbreviated by CE and PE. We will call CE as call option, PE as put option. I will be looking at the chat as well, and let us try to be interactive. I will be looking for certain answers, so I have basic understanding of the knowledge which the audience possess. So before going forward, I wish to ask something. Friends, today very well-known security called Reliance closed at 2510 at end of the day. For example, if I predict that Reliance price is going to be up by 2,600, please tell me what should I buy? Call option. Very good. Thank you for answering. And vice versa, if I predict that Reliance is going to be down approximate 2,400 level, then what should I buy? Very good. So if I am having bullish view, then I should buy call option. If I am having bearish view, I should buy put option. Fair enough. Thank you very much. Now let us move ahead. Buy versus sell. Friends, regarding options market derivative segment, certain parameters are there. If I am a buyer, then what are the benefits? If I am a seller, then what are the benefits? Vice versa, there are benefits as well as disadvantages. We will try to wrap up this. Say for example, if I wish to buy, in earlier example, I need to write on my direction first. It means if I predict Reliance should go by this end of the month by 2,600 level, then I should buy call option. It means I must be right on my direction. That is the first thing. Second thing, I must be right on timing. If Reliance is going to touch my predicted level in next month, not this month, my call option which I purchased will be worthless. So I need to be right on timing as well. Third thing, I must be right on strike price. Which strike I should enter into, it is very much important when I am buying any options. I am saying when I am buying any options, it can be put option, it can be call option. So in an all, I must be right on momentum. Momentum means spike. Momentum means its movement. So I must be right on momentum as well. So in short, we are summarizing all these, that I must be right on direction, on timing, on strike price, and on momentum if I am a buyer of the stock option. Vice versa. Selling is very risky. It is considered as a very risky task if I sell any option. It means theoretically, it is said that I am inviting unlimited risk if I am an option seller. Second thing is, if any violent move comes, whenever I am entering as an option seller, any violent move come in any underlying asset which will be destroying my capital. That's why it is considered very risky. Third thing, it requires very high margin, as already known to all of us. if I wish to sell anything, I need higher margin compared to buying of the options. So, and limited returns, which is very, very much disadvantageous as compared to buying of the options. So these are the four major parameters if we consider buying versus selling. But friends, we are focusing on consistency. So let us move ahead and let us try to capture all these things conceptually within a very short span of time. And then after some of the basics will be clear, we will be jumping to the hands-on on this session, which is very exciting part of my today's session. And at last, we will be having 10 to 15 minutes as per the time permits question answer sessions. So please be ready with your questions. If during the time of my session, if you wish to ask anything, please write down into chat box. I will see and I will respond as far as possible. So friends, coming to my earlier example, let us be interactive. This is again one question which I'm going to ask you people. Say for example, if I wish to predict that Reliance is going to 2,600, you all have answered that I should purchase call option, right? But if I predict that Reliance will not be crossing 2,600 price, then what should I do? I will be looking at selling 2,600 call option, which is currently trading at 21 rupees. Very good. Same way, if I predict that Reliance will not go beyond 2,400 by 31st August, and 24,000 PE is trading at 11 rupees 40,000, then I will be selling put option here. I hope you all are with me right now. What I am predicting? I am predicting that Reliance is not going upper side beyond 2,600. That's why I will be selling call option trading at 21 rupees. Same way, my prediction is Reliance will not go beyond 2,400. Then I will sell put option, which is trading currently at 11 rupees and 40 paisa. So, friends, let us talk on probability. Now, I am asking further questions to you. Say, for example, my prediction will remain same. My prediction will remain same. Now, look at the screen. This is my mistake. Please read 2,600. Please read 2,700 call option instead of 2,600, which is trading at 7 rupees and 5 paisa. And my prediction is same, that Reliance will not go beyond 2,600 rupees. So, if I want to play higher probability trade, then should I enter 2,700 call option or should I enter 2,600 call option? I'm again asking some of the participants are saying 26 call option. Some of the saying to make higher profit, we should take risk. Some of the saying depends on risk taking. Friends, I am repeating my simple question. My prediction is Reliance will not go beyond 2,600 by August. And 2,600 call is trading at 21 rupees. And if I wish higher probability trade, should I enter at 2,700 call option or should I enter at 2,600 call option? Answer is I must sell 2,700 call option for the higher probability of my returns. Because I will have 100 rupees cushion beyond my views. If my view is going to be wrong, I will be safer side for 100 points, which is quite useful for protecting my capital and generating the returns. Same way, friends, I am again asking one question to you. If my view will remain same, that Reliance will not be going to break 2,400 level, then to generate higher probability return, should I sell 2,400 put or should I sell 2,300 put? Now, almost everyone is on the same footings. You are very right. Thank you so much that we are all together and moving forward in my session at the next level. Friends, I'm summarizing this slide. As per me, this slide is very important. If you understand the risk versus reward, and if you understand the probability of making profit, this will be very much useful and very much important to all of you. Friends, now please answer me. If I am saying that Reliance is not going to break 2,600 level at upper side, which is having my directional view, and along with it, if I say Reliance will not be going beyond 2,400, which is already directional view, that if Reliance is not going to upside, Reliance is not going to downside at a particular range. It means if I predict only and only on single side, if I predict, please keep in mind, if I predict only and only single side, which is directional, that Reliance is going to be up or Reliance to be going to be down, which is quite directional, is having lower probability than being non-directional. Will you be agree with me or not? Thank you. It means by selling 2,700 call option, I will collect 7 rupees and 50 paisa in directional view. I know the probability. My view is that Reliance will not go beyond 2,600. That's why I am selling call option of Reliance 2,700 strike price for making my view directional. But at the same time, if I predict that Reliance will not go beyond certain level, it means I am predicting upper range, I am predicting lower range. It means I am non-directional. Being directional is having lesser probability than being non-directional is having higher probability. So in this case, rupees 7.5 plus rupees 3.45 will be much easier for me rather being directional on any particular single side. If you are agree, please write your answer that I am agree with this view. Being non-directional is having higher probability than being directional. Thank you so much. Now, this view, please keep in mind that on this view, we are moving forward to our next session, next level. Consistently is only and only depending on the higher probability. So friends, I hope you will be agree with me that high risk gives higher return with lower probability. For example, you are technically competent enough to enter into the stock market. You are having so much competency that you can predict movement of any particular stock very correctly. And you are having 5,000 rupees capital. You entered into the market with 5,000 capital and you end up your day by making 10,000 more, having closing capital of your in hand 15,000 with your capabilities, with your knowledge. But please explain me, friends, this kind of trend will remain consistent for over next 30 days? No. If I say you are having 5,000 rupees capital and you are going to generate 100, 200 or 300 rupees maximum on a particular setup, it means you are taking lower risk, and you can now say that it will be consistently, it can be consistent with the view for over next 15 to 30 days. So in my conclusion, friends, high risk gives higher returns with lower probability. Low risk gives always lower return with higher probability. So our focus of today's session will be purely and purely on low risk, which will generate higher probability consistently. So I hope now you are with me. So our fundamental of this consistency with the probability is much now clear, and we are moving forward to the our next topic. Friends, in derivative segment, some of the important concepts are there. Let us make it very clear that option chain, people are openly looking at option chain, build up data, etc. I hope you are able to recollect all this terminology and you are aware of these option chain related things. So this is much required if you are willing to explore yourself into the derivative markets. So option chain is one of the most important aspect for the data perspective. You should be aware that these are the data, and you can build up your view on the option chain analysis. Second thing, it is quite required that you should be technically competent with regards to indicators, chart patterns, etc. Then it is called market. Market means technical versus fundamental. Here we are talking about few technical things. Third thing, support resistance, which is important concept, that from where market is going to take support and from where market is going to turn. It is called support and resistance. So we should have this much of basic knowledge. And coming to derivative segment, especially implied volatility is one of the specialized subject which requires thorough knowledge on the volatility, and based on this the options will get spike, may make violent move. So implied volatility is also one of the important concepts. But friends, we are working here on probability only. We will be talking on logics as well. in this session, I have designed my total conceptual and rational things for you people, that if you are having any of this knowledge, or if you do not have any of this knowledge, which will not be any problematic for you all. So friends, in our today's topic, in our today's session, this will not be any silver requirement that you should have thorough knowledge, but basic understanding is always to be expected. Coming to our next fundamentals, which is, we earlier compared buying versus selling. Now we are going to compare options, which is divided into the two segments. First is stock options and second is index options. So friends, I seek your attention over here that it is purely logical why we are going to choose but certain kind of options. So please be attentive, as you are knowing that stock can be manipulated frequently. We do not have any control over the stocks, particular stocks. Second thing, specific news related to any industry or any stocks can violate our structure, our view very badly. So stock options having two disadvantages: manipulation can be done easily, specific news can affect any particular stocks. Third thing, micro versus macro. Micro versus macro means majorly index are affected only and only macros. So we can say, we can conclude by this basic analysis, by this basic rationale, that index options are comparatively safe. We are not saying completely safe. Please be attentive. We are saying comparatively safe compared to stock options. Are you agree or not? Index options are comparatively safe. Thank you. So friends, we are going to talk about our setup. We are going to talk about setups. So mainly our focus will be on stocks or on index. Answer is, our focus will be on index because we want to be safer. So one of the participants is asking, which is better for index? Which is better for index or stock? My answer is, stocks are comparatively riskier than the index. Index cannot be easily manipulated as per general parlance. So we are considering index as the safest option compared to stock options. Coming to index, there are two index, and most exciting index nowadays is Bank Nifty. So we will be focusing on Bank Nifty. Second thing, our view, our prediction will be on Bank Nifty in terms of whether directionally or non-directionally. So my answer is very clear. We will be non-directional in the Bank Nifty. Are you with me? We will be discussing Bank Nifty, and our focus will be purely non-directional side. It means I do not have any view that Bank Nifty will be going to up or Bank Nifty will be going down in next upcoming few trading sessions. So friends, this setup will not require much technical knowledge, and I have designed in a way that normal layman can understand easily. I have certain reservations, certain rules, certain understandings based on our logic, based which will be discussed rationally over here, and we'll be discussing any of your questions at the end of the session as well, that why this setup has certain reservations, why this has been predicted in this manner only, why this is not happen, or why we should not have this rule as well. Your all answer will be taken up at the end of the session. Now my earnest request will be, please listen me carefully for next 30 to 35 minutes. I will give you entire rationale for this setup. Again, this is purely and purely educational basis. This is not any strategy which is designed by me. I am a chartered accountant having rich experience over derivative markets. So by way of experience, I have certain observations which is going to be shared by you as well. And I will explain the logic as well after sharing. So your questions will be very much welcome for me, and we will be delighted to respond at end of this session. So my request, all the participants, so please be attentive now onwards. Friends, please do not go by slide to slide. Please listen me carefully. All the materials will be shared with you after completion of this session. So do not hesitate to read out anything. We are having entry rules. Friends, for example, I have clearly mentioned here, we will enter on Friday after 3 p.m. When we will enter after previous month's expiry day. For example, if I need to enter for next month, which is September 23, entry should be on 1st September, because August month will expire on 31st August, and very much next trading session is 1st September. So last day of the current series of expiry is 31st August. So we will be entering on very next day. Friends, what is the logic behind this kind of entry? First, those who have rich experience of the derivative segment will be agreeing with me that on a particular series, traders have predicted, market participants have predicted their view, and they are going to expire in a particular series, and the entry had been made at specific interval for the specific view. So all the views, we should try to wait that all the views must expire. Please listen carefully. All the views must expire on a particular expiry series. Then we will be looking at very freshly, and on Friday, you might have experienced that Friday there may be violent move, or there may be major ups and downs after expiry. If the open interest or something like that in option chains, you can read. So our next entry date would be on next day of the first day of the very first fresh expiry. So in this case, I have made very simple explanation that for September series, our entry should be on very first day of the September series. Friends, my view is non-directional. So for example, we predict, for example, let's say August series expired at 48,000 Bank Nifty. I am talking about Bank Nifty. August series has expired at 48,000. So our distance on spread will be minimum 2,500 points. So for example, if I am going to sell call option, my distance will be minimum 2,500 strike price. So in this case, if on last day of August, Bank Nifty closes at 48,000, so I will be entering at 50,500 call option at upper side, and at lower side I will be entering at 45,500 put size. So in all, my lower distance is 2,500 points and my upper distance is 2,500 points. I hope I am able to clear my points very clearly. On entry, we are having only and only two rules. One is entry date. You can enter after 3 o'clock. So if you can have very stable view on very first fresh expiry day. So our entry should be after 3 o'clock on very first day of the fresh expiry, and our entry will be basically on the distance of 2,500 point on upper side and 2,500 point on lower side. Yes, we will see to the liquidity because we are entering into the monthly expiry. So we do not have any issues related to liquidity. I mean to say we don't need to buy right now. We are just confirming our entry rules. We are just confirming our entry rules that we should be at 2,500 points distance at both the sides, on upper side as well as at lower side. Friends, this is the basic rule of our setup. We will be hands-on session later on, so please be patient. I will be displaying each and everything that your concept and your understanding will be clear after getting through my sessions. So I hope you all are with me till now. So we are just going to live. I mean, we are just going to live how we can enter into the market. These are the basic entry rules. First is our very precise day along with time, and second is our strike price selection. Yes, sir, I will be explaining that what is the range interpretation between 2,500 to 5,000. It is pending because I do not mess up all these things. When we are doing practicals, I will be explaining you that how we can go up to the 5,000 range. So friends, you are with me till now. So we are just going. My exit rule will be like this. For example, if we have collected 1,000 rupee premium, for example, hypothetically, if we have collected 1,000 rupees premium for our entry, we will exit once we collect 500 rupees or once we collect 700 rupees. This is my very first exit rule. Second thing, in this example, we assume that Bank Nifty has closed at 48,000 and we have sold 50,500 call option at upper side. Then this is the second rule, which says if Bank Nifty is getting close at the end of the day at 50,000 rupees, which is 500 points closer to my main strike price, I sold 50,500 call option. So if Bank Nifty closes 50,000 or near, I will exit from this setup. I hope I am clear. Third point. Friends, third rule is if I am collecting 900 rupees premium, total collectible premium was 1,000 rupees. So 90% profit, if I am seeing on my screen, I will be completely existing from my setup. This is my third exit rule. Fourth one is important. I seek your kind attention on fourth one. In this example, if I have sold 50,500 call option, for example, let us take hypothetical value ₹100. 100 रुपया पे मैंने बेचा है. If I have sold 50,500 call option at ₹100, then if that strike price options exceed its value by 3 times, it means if that option price exceeds 301 rupee, I will exit from my setup. I am repeating my last exit rule. Hypothetically, we assume that we have sold 50,500 call option at 100 rupees premium. So in short, I am collecting 100 rupees. Yes, I am option seller. If during these days, if that strike spikes and it goes beyond its 3 times value, it means if it is trading at 300 plus, then I will exit from my entire setup. I will explain you in a practical way. So please do not worry. As of now, these rules must be clear to you theoretically. Yes, Vikramji, you are correct. So let us go ahead and let us have hands-on session. So friends, I am using one platform, and one disclaimer is here, which I wish to make, that this platform is used by me. It doesn't mean I am having any commercial interest and I am promoting. Just for the ease of my trading, I am using this platform and I am comfortable with this platform. So I am showing you this platform and calculations on these platforms only. You can have different kind of platforms as well in market, but with a view to back testing purpose, I have choose this platform, which is very much familiar to me. First of all, friends, let us try to enter very fresh trade. Friends, recently I wish to bring to your kind attention that SEBI has relaxed margin rules. So I wish to explain you that how margins will be applied to our position. And second thing, in our setup, we will be always hedged. So we will be having very limited risk. So you don't require to worry for anything. Just be with me. I am here to explain you Bank Nifty setup, which we have discussed previously, that we are going to be non-directional in this index. So friends, for example, I have chosen here Bank Nifty. Our next expiry is 28th September. So I have chosen this series of 28th September. For example, here 45,000 around price is displayed for Bank Nifty. So if I wish to enter, I repeat, I am speaking just for the educational purpose. So please don't jump tomorrow when markets opens. It will be very riskier for you people. I'm just explaining you that how is the setup and what will be the outcome consistently. So please be with me. We are discussing Bank Nifty, our expiry strike option will be based on our simple calculation that today we have seen that 45,000 around. So plus 2,500, it means, sorry, we will be selling 47,500 call option. Please say yes if you are with me. And at bottom side, we will be selling 42,500 put option. Oh, sorry. I have seen just a minute, friends. I apologize. I hope now screen has been shared properly. Please confirm. I will definitely repeat each and everything. Please confirm. Now screen has been shared. My apologies to you people. So friends, thank you. Thank you. Friends, this is the options platform, one of the widely used options platform, which is going to be used in our session. Friends, we are going to build our setup, and I am here. I have selected Bank Nifty. I have selected the series of expiry as 28th September, and just we have predicted as seen here. Today market price, spot price is 44,858. So it is very much close. It is very much one second. Friends, 45,000 is closing price, we can say. We will be sitting 2,500 points away from the current closing. So we will be selling 45,000 plus 2,500, which means 47,000 call will be selling. And same way, we will be selling 42,500 puts. I hope you are with me. So we are going straight away to sell 47,000. Just a minute. All strike I need to choose 47,500. Friends, what can I say? Recently, lot size has been reduced from 25 to 15. It means earlier, if we sell in terms of quantity, for example, 500 quantity, it means we can say 20 lots. So we will be continuing with that concept only, that we will be selling 500 quantities nearby, near to 500 quantities. It means we can say 500 quantities means 34 lots. We'll be selling 34 lots. I will explain the logic for understanding purpose. Just now, we confirm that we are going with 34 lots only from selling both sides. So we are here adding this particular strike option, add position. You can say you can see the graph here. We have collected 68,000 premium. I hope it is visible to all. I hope it is clearly visible to all, rather. थैंक यू पवन जी, हमने ये सब डिस्कस कर लिया कि 47,500 क्यों चूज किया हमने, बिकॉज वी हैव डिसाइडेड इन दिस सेटअप टू गो फार up to 2,500 points, because Nifty has closed at 45,000. So we have add 45,000 plus 2,500, and that's why we have selected 47,500 call option. So right, friends, and here you can see the estimated margin is 19,88,434, and you can see here returns. It means I will be collecting premium of 68,000, which will generate 3.47% of return on my investment. So this is very first screen for you people. So I will be highlighting the important parts of this screen, so you can correlate this setup very easily. So friends, we have entered only at one leg. We are coming to 42,500, I think. Yes, 42,500. We are going to enter at 42,500. Look at the liquidity. All are liquid. No issue at all. Now, friends, coming to this setup, you can see here margin required is 24,45,991, almost 25 lakhs we can say, and our return has increased. Earlier it was 3.5%, now it is almost 5.5% and more than 1,25,000. I hope you are with me right now. 25,000 upper side, 25,000 lower side. As we have seen, we will be completely hedged. So friends, now here comes the margin benefit for this setup, which will generate our expected returns. So for example, if I want to hedge this position, I will buy certain strikes call option and I will buy certain strikes put option. For example, we have entered 47,500. I request you to add 1,000 point. In this figure, it will come 48,500. So I will be buying 48,500 call option. And same way, I will be buying 41,500 put option. Friends, it is very easy and you can see the magic. Our position is completely hedged and look at the margin required. It is quite half of the margins we have seen the position without hedge. I think this is clear to you. For a change, if I will remove this hedge portion temporarily to understand in a better way. For example, if I enter hedge position at 500 plus from the existing setup, and then we will see that how we are going to be benefited. I will buy 49,000 call option. I will buy 49,000 call option. Now options are in front of you, friends. Margins are slightly increased from near about 12 lakhs to 13.5 lakhs, but my returns has also been increased. You can see, because by choosing 500 more far, I will be paying less premium for the hedge. So I have chosen to go 500 far than the existing position for my hedge purpose. So not to make confuse you people, it is very simple that we have decided to enter into this setup at 2,500 points far from the current close of Bank Nifty. In our this calculation, we have seen that Bank Nifty has closed hypothetically at 45,000 points. We have added 2,500 points to 45,000, which comes 47,500, and we have entered our call position at 47,500 and our put position at 42,500. I hope both these legs are very much clear to you, and after this entry we have made our position hedge to have margin benefits, and we have went beyond 1,500 point from our entry point. It means if I have entered 47,500 call option, then I have purchased 15,000 plus. It means 49,000 call I purchased to hedge my this position. And same way, to hedge my put position, I have purchased 41,000 put option. I hope this is very much clear to you people, and I am removing this position because 48,000 call and 41,000 put doesn't require, because we have decided to go 1,500 points beyond our strike price, which we have originally entered. Friends, now coming to our rules, I wish to clear this rule. Rule number 4 is that if single side main strike sold exceeds its value 3 times, it means if this strike single side means we have entered 135 rupees, we have entered at 128 rupees. So for example, this is my entry price, this is my entry price. These both positions are sold positions. I am talking about first two positions. These both positions are our main positions, our main premiums. So if it trading gets trading beyond 3 times, then for example, my entry price is 135 rupees. If this call price is trading at 405, I will exit. Similarly, if 42,500 put option I entered at 129, 3 times value is 387. If this is trading beyond 387, I will exit from my setup. I hope my exit rules are very much clear to you people. Now friends, I have explained each and everything. Now let us verify this. Yes, friends, I will discuss all this stuff. Please give me more 5 to 10 minutes. We will be wrapping our session by 6:40, leaving 10 to 15 minutes time for question answer. I will clearly answer all the questions and all your queries. So friends, let us back test. For example, I have given this setup to you. Now let us verify that how it should be entered, how it should be exited. Yes, Prakulji, once any of the stop loss or any of the rule violates, we need to exit from entire setup. We need to exit from entire setup. Thank you. So friends, let us backtest. For example, we are mainly discussing here monthly expiry. Some of you have asked for weekly, but friends, in this short duration, we cannot discuss all the things. So I have decided to discuss only and only monthly expiry. My logic will remain same. I am giving you the logic that how this setup will work, how this setup has been designed, and how it is going to be higher probability one. So friends, let's backtest this. I wish to backtest from beginning of this year. From beginning of this year, and we will be moving forward. And I have certain setups for you, friends, that it is not easy. That you are seeing the entry rules and exit rules. It is not that much easy. So I have decided to pick up 2 or 3 very wild move that can destroy any trader for this setup as well. So please be patient with me, and have faith in my knowledge and working. I will explain the burst period of the market before I close. I assure you that please do not doubt as of now in your mind without seeing my entire things. So I request please be attentive for next 10 to 15 minutes. We will be moving very quickly. We have selected here Bank Nifty, as I have mentioned that we will be starting from this year only. So this year monthly expiry will be, 25th January, right? So friends, on 25th January strike price, my time to enter will be earlier month. I mean, I need to enter in December. My entry will be on 30th of December. To enter into the January series, my entry point, my entry date will be 30th December 2020. I hope I'm clear. So I will be fetching data till 25th January. So we are seeing here at 30th December, time is 9:20 and spot price is 43,260. So these are the major points we will be looking at while doing back testing. So friends, we will be entering after 3 o'clock on this day after 3 o'clock. So this is 10 o'clock. I will go till 3 will come. This is 3 o'clock. 30 दिसंबर को हम 3 बजे एंटर करने वाले हैं यहाँ पे, और let us get data. Currently spot price is 43,160. Friends, for the sake of simplicity, I have designed one template, and I am just enlarging this template for better viewing. So friends, here I can write that we are entering into the 25th January 2023. I hope you are able to see my Excel sheet right now. Oh, okay. Now you should see. Please confirm that you are seeing right now Obstra. Right now Excel. So I will be working in Obstra and Excel only. Thank you. Thank you. Hence, we have chosen that 25th January. So just I am. My entry date is 30 दिसंबर को मैं एंटर हो रहा हूँ, तो ये 30 दिसंबर है, फ्राइडे. Current market price 43,160. Current market price is 43,160. We can round. Please keep in mind, due to liquidity issues, we will be rounding off next 500 figure. For example, 43,160 is nearby 43,000. So we are rounding to 43,000. So my entry rule says that we will be sitting at the distance of 2,500 points. We will be sitting at 2,500 points distance. So in short, we are going to sell 40,500 put, and we are going to sell 45,500 call. This is basic template. So I hope I have made first working as well. So 40,500, we will be selling 34 lots ideally. Friends, why 34 lots only? Why not 30? Why not 40? Why not 50? Because earlier we used to enter at calculation purpose. For calculation purpose, we used to enter at 15 legs of margin. So our calculation is habituated on the same footing. Since nowadays the what you can say lot size has been changed by NSE, so our calculations will remain same. Accordingly, we have designed to calculate with the 34 lots, which is equal to around 500 quantities each. So no rocket science behind choosing 34 lots words only. So we are here selling 40,500, and we will be buying 39,000 coal. For example, we are buying 34 lots. I will be very quick after this first calculation. Now we will be selling 45,500 at 136 rupees. We will be selling this, and we will be buying 47,000 odd lots for hedging. So friends, this is the setup which we discussed. I made mistake somewhere. 45,000 and 45,500. I need to sell 45,500. 45,500. I beg your pardon. Yes. Around 510 quantity is there, so it is good. Okay, friends. This is the payoff chart. The green is the portion of our interest for which we are here. And look at the national loss. 11 lakhs. 89,107, which is purely and purely theoretical loss. We will explain. We will see. Just a minute, friends. Now we are going to backtest this thing. I am moving one day later. It means we are seeing data on 2nd January 2023 at 3 o'clock. Friends, no major movements will be happening because we are sitting at a distance of 2,500 points. So we will be looking at the data on daily basis only. If any movements are there, we will be looking at 5 minutes and 15 minutes as well for the clarity of our setup. So we are seeing here 2nd of January. Look at here, we are plus by so and so much amount. On next day, next trading session, we are plus by so and so much amount. Look at the spot price of Nifty as well, Bank Nifty as well. Again, we are plus. So friends, our exit rule says if our entered price is 80, and if this is going to trade beyond 240, which is 3 times, then we will exit. Again, our entry price is around 80. Same will apply over here as well, right? coming to payoff chart. Again, we are plus by so and so much amount. Look at this price, 42,141. Our entry main strike sold is 40,500. So we will be exit from this setup once this Bank Nifty is going to trade at 41,000, right? Because it will be closer to 500 point from where I have sold my main strike. Sorry. Sorry. Now I hope it is clearly visible to all. And each and every screen I have said all the screens, so there will not be any issue. So friends, again, my apologies. Please look at here. Please look at here. We are seeing data as on 9th January at 3 o'clock. We have entered at this point of time. 30 December को हमने एंट्री ली थी, and we are seeing this data as of 9th January. Friends, we are going to collect premium of 85,000 and we are receiving here 37,000. We are looking to book at minimum 50% of our premium. Since market has been volatile, look at the spot price of the Nifty, Bank Nifty, which is coming nearer to my strike sold. Again, on next day, let us see what happened. It is going beyond 42,000. Here is the spot price. Again, I am moving to next day. My next day, I am receiving 25,000 rupees, which is not 50%. Still, I am holding my position. And on next day, on 13th January, yes, of course, I am receiving 52,000. I think I am receiving 52,000. So I will be writing here 30th day, Friday, I am receiving 52,725. Current market price is 42,337. And the time at 3 o'clock. $85,892. 85,892 generates 6.14%. And we are here for minimum 50% of the profit. So at current market price on 13th January, we are seeing profit. So we can exit, we can plan to exit our position on this day. We can plan to exit means complete exit. There is no hold of any leg. If we do not exit, if you are predicting market that it will be range bound only, and then what we can say, we are just moving to the next days. It is, for example, the 17th January, okay, and our collection is 61,795, which is are beyond than 70%, and we are collecting this kind of return within 18 days. You can see the returns, and still we are holding. For example, if we are holding, what will be the return on Wednesday? let us say from the data itself, on 18th January, strike current market price is 42,497, 42,497. Yes, and we are collecting 71,102, 71,102, which is quite good, but not enough to exit. For example, still we are trading, and till 90% of profit collected, we wish to be in trade, for example, and on next day we are collecting Vikramji, we will be looking at the maximum lows as well. So I mentioned earlier that please be with me till I complete my session. I have selected very violent examples, so you will assess this setup once you see the examples. So friends, here I think my screen is shared. 78,497. 78,497. 78,497. And the current market price is 42,481. We are collecting almost 91% of the premium. So within 20 days, so we should not wait till the expiry. So it is as simple as this. We should exit from our setup, and any question, friends? Till now, this is very first example that how it works and how we should exit. I think Offstra is visible to you right now. Okay, thank you. On what amount 90% is calculated? Sepalaji, we have collected premium, total premium collected is 85,000. So our profit maximum limited return is 85,000. So if I am collecting 90% of 85,000, I will exit my trade. This is how we derive 90%. I hope I am clear. So we will be very quick coming to next setup. Friends, always it is considered that budget period is very much dangerous to play with options. So, but our 25,000 point distance setup is quite good to enter even on budget days. So I am here with one example of recent budget, and you can analyze this example, this setup with previous budget of 2022 as well. You will see amazing results. For example, we are entering into the February month. For example, 23rd February, I think, yes, 23rd February is the expiry of the February series. So if we wish to enter into February, we need to enter at very first day of the February series, which is 27th of January. I hope this is very clear. I will not ask frequent questions right now. I will be very quick. We are not able to see. Data is not valid. Data is not liquid. No. It's my mistake that I need to choose at 23rd February only. Okay, fine. It is fine. It happens. No worries. I think you are able to see this screen as well now, Excel sheet. So here I can say 25th of February, our entry date will be 27th of January, which is Friday, February, Saturday. Sorry, 23rd February, 23rd February. Okay, Thursday. Right? At I will be very quick. At 3 o'clock on 27th January, our price, spot price is 40,266. 40,266. We can round 250 से ऊपर है तो we should round at 40,500 ideally. ठीक है? We are sitting at 2,500 points far. So for example, we will be selling 38,000 and 43,000. 38,000. Look at the premiums, friends. Look at the premium. 238 rupee premium. Look at the premium. Very volatile. Very high implied volatility is there. 43,000. 43,000. 169 is the premium. And we will hedge by 44,500. 44,500 we will purchase. And for 36,500 we will purchase. So friends, I wonder that how I can take 34 lots because lot size has just changed. So let's reset to 20 only. Let us reset to 20 only because we are back testing at that time. So 38,000 we are going to sell and 36,500 we are going to purchase. 36,500 we are going to purchase. 43,000 and 44,500. 43,000. 44,500 we are going to buy. I think this is much clear now. Returns are also very reasonable. Friends, I hope you are able to see Obstra right now. And we have discussed that we can sit at 2,500 point, 3,000 point, 3,500 point till 5,000 points distance. So friends, so one thumb rule is this. For example, if we are collecting, we have discussed that high risk versus high returns. We are collecting more than 1,15,000. So we need to reduce this amount within 1 lakh rupees only. Please listen me carefully. We need to reduce this maximum profit. Collected premium is 1,50,000. 1,15,550. We need to reduce it within the 1 lakh rupees so as to reduce our risk. Friends, this is the budget week, budget month. So premiums are trading at higher level. So we are receiving higher premiums. It means we are collecting higher premiums. That's why we are sitting at 2,500 points. Basically, now we expand our spread to 3,000 points so as to reduce this 1,15,000 within 1 lakh cap. I hope I am able to make my point in front of you people. So again, we are here entering at the distance of 3,000 points. So our put will change strike will change to 37,500 and call price will be changing to 43,500. I'm just going to reset 30, 27, 37,500, 37,500. Here is a problem with backtesting. We do not have data of 36,000 put. So we are selecting data of 36,500 instead of 36,000. 43,500. 43,500 is on sell side and 45,000 will be on purchase side. 45,000 will be on purchase side. Because this is looking like this, because we are short of 500 points because of having no back testing. So in short, friends, we are collecting 69,275 rupees premium, and we are again back testing. You can see on budget day, it is on 1st February. Nifty, Bank Nifty is not moving in any direction. So we can book our first 50,000 first 50% very soon. On 8th of February, we are seeing here 34,725. 34,725. So we are booking this on 7th February 2023 at spot price at 41605. So generating this much of return, and if you went beyond this during this period, and you will have ample returns. See here 44,675. You are collecting on very next to next day. It means within 13 days you are collecting 4.41% of returns on your investments. Friends, we are running short of time. I think I need to take a very violent move as I promised. So first of all, I need to explain you that how the Bank Nifty moved at a particular point. I think you are able to see my trading view. I'm just getting open Bank Nifty chart. I think this screen is visible. We are seeing daily chart of Bank Nifty. December 31st, December 2021. 31st December. Look at friends here. This is the point. This is 30 December 2021. Exactly when we are going to enter at this date. Exactly, we are here just after our entry. Bank Nifty gets volatile, and more than 3,500 point Bank Nifty has moved. Now we are just seeing our strategy, our setup, how it will be working. Uh, 27th January 22. 27 January 22, and we are entering at 31st December 21. 31st December 21. And we will be having data till 27th. 27th. Okay, I will be going to something. Till now, as per our rule, we will be entering at 35,004. I'm just here writing 27th January. 27th January, it is our entry date. So 27th January, okay. Our entry date will be 31st 21. 31st December 21 is our entry date. 35,480. 35,480. Which is 35,480. So we can round 35,500 and 2,500 points distance we will be sitting. Accordingly, we will be selling at 33,000 put option, 33,000 put option, 20 lots, and 31,500 will be buying. 31,500 we will be buying. Same way, we are saying we are selling 38,000 call, 38,000 call we are selling, and plus 1,500 point, 39,500 call we are buying. So friends, in this setup, we are collecting 89,950, 89,950, and 6.43% return is expected. Coming to next day, very next day, that is 3rd January, very volatile move. We can see here nothing has triggered as of now. On very next day, we are just going 15 minutes. This is the closing of this day and opening of this day. At next day, 4th January, opening of this day, we are minus by 30,000 rupees, and let's see. It will be easier. My stop loss is 115 into 345. For 350 around, I will be exiting from the setup. 945. We are jumping minimum 15 minutes or 30 minutes. Let us see 30 minutes. 353, 325 at 12 o'clock, 12:30, 323, 324, 307, now look at this point. It is going to be very wide. 2:30, and coming to next 319 and 344. I will be exiting at 344. My net loss is approximate This is the very wild move I have seen on very next day of my entry. This has been triggered, and I'm out for this much of loss. Notional loss is 6,60,000, but you can see our rules, our exit rules have triggered, and we are out of this setup because again risk reward is favorable. If you see 89,000 is going to be collected versus we have uh, realized the negative return on this particular month. So friends, these are the simple setups you can back test. Uh, keep in mind that entry and exit rules, we have restricted this premium collection of to 1 lakh rupees because to reduce the volatility. So you can have some more distance if you are collecting more than 2 lakhs. Sometimes when the IB spikes all of a sudden, when you are going to enter, then you can receive beyond 2 lakhs of premiums. In this way, you can expand your spread to 3,000, 3,500, 4,000, up to 5,000. And please, friends, one important point I would like to make here. If you are getting less than 25,000 of premium collection, it means you are seeing here 89,000 amount. If you see here 25,000 or less, please do not enter, because at 15 lakhs of capital, if you are receiving 25,000 per month, it is around 1.5% of capital, and our setup says that you should exit at 50% of the premium collection. So 0.75% premium or return is nothing worth rewarding return, which does not permit or meet our risk reward criteria as well. So if you are getting less than 25,000 of premium in any of the premium in any of the month, you should not enter, because we have not entered in July expiry, because we have collected only some around 12 to 15,000 premiums. So we decided not to enter in July month, because India VIX is making new high every day. It is tough time for option sellers to sell and collect premium. But friends, this is the logic, because we are higher probable in terms of if we remain non-directional, you can put your technical skills like support and resistance, then you can predict your markets that in this period market will be range bound, so you can generate higher returns. But for safer side, I have mentioned that you should always be hedged. You should always have clear entry and exit rules, and you should have stick to your setup rather your emotionals. Friends, consistency will make you rich, you healthy. Consistency will make you very happy. Friends, I have certain dates for where we can backtest, but due to want of time, now I need to conclude and take very short questions which you have, and I request that please backtest this setup. Please have thorough knowledge of this logic, this rational. You can apply on weekly, you can apply on other index as well, because being non-directional is always profitable, because being option seller is always profitable, because ultimately theta, that is time decay, is your friend when you are option seller. But we need to have certain set of rules. So I have given you one of the best setup which we work on routine. So if you are having any questions on this setup, entry and exit rules, again, it is for educational purpose. So please do your due diligence, do your back test. I have given you the entire entry and exit rules. If you are having any confusion, if you are having any queries regarding this bank nifty or index options, you can please ask, and I request coordinator to open the question answer session. Thank you. Sir, extra charges are mentioned on that particular website, so it is easily collectible figure. So we should not discuss here. Anything related to this setup, you can. Can the same strategy be applied for Nifty? Yes. Yes, same strategy can be applied for Nifty, but distance should be like 500, 700 points. Likewise, you can backtest and have your own set of rules. Any app which give total AI. There are so many apps. On exit, what happens to hedge the option of buy? We will completely exit. जो हमने हेज किया था वो भी स्पाइक हुआ होगा तो हमें उसमें से भी बेनिफिट मिलेगा, बिकॉज अवर बाइंग प्राइस से कई गुना ज्यादा वो अप ट्रेड कर रहा होगा, तो इट इज बेटर टू एग्जिट इन ऑल लेग्स एट अ सिंगल स्लॉट ऑफ टाइम. एनी क्वेश्चन फ्रेंड्स? अनएक्सरसाइज हो सकता है एक्सपायरी में, ऐसा कोई है नहीं कि आपको एग्जिट करना ही है. वन जनरल क्वेश्चन इज दैट व्हिच कंपोनेंट अफेक्ट्स बैंक निफ्टी. माय सजेशन टू यू इज दैट you can have the indices components from Google, that bank nifty will be consisting of so many banks, and each of the weightage you can derive, and those banks can affect the entire index. Can we do weekly as well instead of monthly? Yes, Ankita Gandhi ji, you can do weekly. But since last 1.5 months, there are no good premiums. As I mentioned in July, that in monthly expiry of July, we were not able to collect premium more than 15,000. So risk reward was not permitting us to enter. And if India VIX is starts rising, then we can have weekly expiry as well. And I can say that you can backtest weekly options at 1,500 points distance. So you can have amazing results. Can you re-explain single side exit 3 times value? Yes. If by entry point is 100 rupees at single side, and if that leg is trading more than 300 rupees, then you can exit from the entire leg, entire setup. So friends, thank you for listening me very patiently, and my sincere thanks to WRC for the kind invitation. My sincere thanks to Rahul ji for the kind words, and the moderator ji for the nice introduction. You can, friends, you can apply this logic to number of index like Fin Nifty, Nifty, on weekly basis, on monthly basis, because being non-directional will always be beneficial, and being being at selling side will always be beneficial. But we need to look at the limiting our risk, and we need to have certain setups, certain rules on which we can protect our capital. Here we are here to protect our capital. We are here to generate consistent returns. So we need to keep in mind these things. We are not here to speculate anything. Please show slide of also apply, as I said, that we will not discuss any presentation of some. Yes, sir. I will be sharing the entire template of working. Please keep in mind, I am sharing minimum 10 to 15 examples of this calculation for the benefit of you people, because I was not able to share all the examples on the screen. So you can have that Excel file, and you can backtest the same strategy at your convenient time for the learning purpose. So Yes, this is the exit rule. You can have screenshot, and I am sharing this presentation along with Excel sheet by tomorrow. So friends, thank you. I request Ravi Saji to take charge of this session. It is my
Yeah.
pleasure to be with you.
Yes, sir. Have you completed the session, sir? Question answer
I have-
session is completed.
Yes, I have completed this session.
Members, any more queries and questions to be asked, or it can we close today's session? I think, sir, most of the queries has been answered by you. So let's wrap it up for the today's.
Thank you. Thank you.
So thank you, sir, for the wonderful session. And on behalf of ICAI and WIRC, I would like to thank you for giving your precious and valuable time and giving us the knowledge on the securities and option market.